India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a fresh new week, Monday morning. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks.
Morning.
And before anything else, it's beginning to feel a lot like Diwali, if I could say. The festivities are here. I'm sure a lot of our viewers, I'm sure you gentlemen had your share of the first round of the parties, right? And the market has been a little tough, for sure. But I think the sentiment is positive. We have a lot to celebrate. It is a season of light and joy, and maybe some of that will rub off on the street as well.
Well, that's the hope. So let's get straight to the action.
No help. I mean, the festivity, you're absolutely right. I mean, the first round of parties and order. But markets, we could have had some help from markets as well. And that at the margin may have soured the mood a little bit. But, you know, we're hoping that maybe the bulk of the damage is behind. And we'll talk more about this. Let's just first take stock, right? I mean, what has happened from the all-time highs as far as indices are concerned? So the Nifty, Bank Nifty, mid-cap and small-cap indices all up on your screen. The mid and small-cap indices reaching the 10% loss mark from their respective highs. The Nifty is down about 8. The Bank Nifty is down about 7.5%. So this is the damage that we've seen so far. Now, you know, we've had sharp losses in the broader market in the Nifty. And the hope is, as we begin this new session, that the bulk of the damage is behind. The market needs to take it step by step. We need to first see a positive daily close, as we always say. I mean, that's the first step. And then you kind of build on and climb above the hourly, daily averages, etc. Flows have been pretty spectacularly sort of negative and positive, right? That's a number. Those are not -1 and 0.09. The unit is lakh crores. 1 lakh crore worth of selling of stocks in October so far from FIIs, and almost all of it mopped up by local investors. The big question that, you know, I've been sort of asking for the last few days has been, will foreign selling start to abate? Because if it does not, along with all the QIPs and IPOs, etc., local mutual funds who've been doing all this buying and mopping up the stock will run out of cash at the margin. And incremental buying or selling is all what matters, and that decides the sort of the incremental price as well, whether the markets go up or go down. And the hope is, and I really think, if a large part of the selling has been because of China, I mean, I think the bulk of it perhaps is already done. About $12 billion has left the shores, and you know, maybe a large part of it is down. Friday, of course, we saw a negative number, but it was smaller than what we've seen over the last couple of days. Small mercies, silver linings. This, you know, but that's essentially what you're hanging on to right now. Wall Street on Friday, it was absolutely flat. Nasdaq actually was up about 0.5 odd percent. Wix went up 6%. We're back at about 20.3. Yields are up, and you know, 4.24. Actually, it's interesting. It's almost been a month since the Fed cut interest rates by 50 basis points. And in the same time period, bond yields have moved up by, I think, almost 75 odd basis points or so. So it's like bond market is saying something else. And of course, you've got US, the Fed path, which is, of course, indicating that they want to cut. And we'll talk more about this. What is the bond market pricing? There was, of course, the probability of Trump coming in, sort of getting elected in a few days from now. And it's a close rate, but there is also perhaps, I think, is inflation expectations, reflation really. Dollar index 104.26 is where that left off. Oil prices 2% higher. There are developments in the Middle East, 76. We'll talk more about that. The week ahead, lots of things. So US election developments, I think, will be closely tracked. Lots of earnings. 40% of S&P companies report earnings. 5 of the Magnificent 7 stocks. And of course, FOMC, we won't hear from many Fed speakers because they go into the blackout period ahead of the November 7th FOMC meeting. Levels to watch, just to sort of tie this in, the downside target, the downside level, the first one is about 23,700 as far as the Nifty is concerned. On the upside, the 40 hourly exponential is 24,487. So this is essentially the range for the market, really. And we need to get above these hourly averages, and then, of course, the daily, and then we start to talk about whether the bulk of the damage is behind and market wants to turn. The Bank Nifty broke below the low of 51,107 on Friday. Immediate downside levels to watch on the Nifty Bank are 51.94. And on the way up, resistance comes in at 51,130, which is the 40-hourly exponential moving average. So that's essentially what we are looking at. GIFT Nifty will come up on your screen. It's indicating a bump, a higher start, about 50-odd points worth for now. Surbhi.
Oh, the bulls will take that with both hands, right? If we get a little bit of that green that the implied open is right now indicating, considering how weak the last couple of days and weeks actually have been. Now, just some updates. So the global setup is looking actually fairly benign because you had that rally on the NASDAQ. And this morning, most of our neighborhood markets are actually flashing green, including Japan, where there has been the ruling LDP party losing its majority, but it's a long expected line, so it's not really shocking the market at all. So Japan's cruising along, going ahead. There's some buying in mainland China, some buying in Hong Kong as well this morning. Oil is the other very positive headline for us. Look at the tumble in oil prices today. Oil has fallen about 4.2% from the start of trade this morning, Asian trade this morning. And that's a bit of a relief rally because the strikes that happened remember, Israel did finally strike back at Iran, but it did not target the oil infrastructure or the nuclear facilities. So it seems that for now, that level of escalation in oil barrels moving out, perhaps that fear is immediately out of the market. But you never know, it's always tentative. Right now, of course, that cue is very positive. The entire gain of last week has been wiped out this morning on oil. Okay, now for us, 4 consecutive weeks of losses, 5 consecutive days of selling. All the headlines are quite negative. The Nifty has now come down to a level of almost 24,100, trading well below, of course, the 100 DMA as well. The VIX in India also shot up, on Friday as well and overall last week. On Friday, the VIX was up almost 5% higher, and for the week, the VIX moved up almost 12%. Just indicates a sense of nervousness and anxiety that seems to be out there in the market. From the peak, Nifty is down about 8%. Bank Nifty is down about a little less than 7%. Mid caps and small caps have lost almost 9.5%. Technically, let's see if that that 10% technical correction happens or not. FIIs, again, we had a sell figure on Friday. It wasn't as big as what we've seen in the last couple of days, but nonetheless, it's about 3,000 odd crores. So Prashant's point is very well taken that if the extent of the selling doesn't ease, then will domestic institutions continue to be able to offset the kind of FPI negativity that we're getting. So those are the numbers from Friday. Results, and more results. And today you're going to hear a lot of chatter about asset quality. And we have a mixed picture. Let's start off with the good. ICICI Bank standing tall, sparkling results at a time when there's so much of talk about slippages, asset quality concerns. Look at what the bank has done. The gross NPA ratio has actually improved. It's fallen to 1.97. The slippage ratio has improved. From 1.9, it's come down to 1.6. And of course, the net interest income, PAT, all of that is above post class numbers from ICICI Bank. But then come the other lenders. IDFC Bank, Credit Access Grameen has been a real shocker and howler. And even Bandhan Bank, you'll hear a lot more about asset quality issues. And we'll discuss a lot of this with some of the managements as well. For IDFC Bank, the credit cost guidance for the full year has been increased from 1.65 to, over 2%. Bandhan, same situation over here, sharp rise in GNPA. And the slippage ratio has gone up as well. And Credit Access Grameen, watch out for this stock today. Because not only has the GNPA gone up, they have gone ahead and revised their credit cost guidance for the entire year in a very big way. They're saying that instead of, about 2.2 to 2.4%, credit cost can now touch 5%. That's the extent of credit quality, asset quality pain that's showing up in some of these numbers, particularly wherever the MFI portfolio is pretty big. But then you've got Bank of Baroda, Shriram Finance, more steady picture over there. Some of the, beyond BFSI, if you look at numbers, and you've got some weak headlines coming in from Coal India. Nigel will tell us a little more about that. From, Interglobe Aviation, even DLF, not that great. And aside of all the earnings, keep Axis Bank on your radar because of the Max Life deal. SEBI has shot off a show cause notice to the bank and some of its subsidiaries as well, asking for certain explanations. So, aside of earnings, that could be a stock on the radar. But primarily, I think we'll just have to get through the earnings and figure out if the market is willing to look at the glass more full than empty. But I think, critical levels ahead, Nigel.
Well, that's right. We've seen a bit of a correction on the headline index. So my gut is that it's a good time to buy good quality stocks in the longer duration, and particularly for companies that are delivering good numbers. So let's run you through a few data points then that I've pulled up. Over the weekend, yes, we had that geopolitical skirmish that did take place. And that, in fact, obviously has soured mood, but it's not had a big impact on financials, whether it's the equity markets or whether it's on crude oil prices as well. 3 big points with regard to Friday's trading session. It was a weak one, for sure it was. But institutions, actually, they were net buyers. In fact, in the last week, the FI net sell number has reduced if you compare it to the previous week. So on the institutional side, things are not that bad in comparison to what we have been talking about. Next up, we had a sharp fall, but the volumes were not enormously high. For the kind of selling we had in Friday's trading session, well, the traded value was more or less in line with what we saw in the 5 sessions prior to Friday's session as well. So the fall didn't come on very, very large volumes. And what about the FIs? How are they positions? Well, on index futures, they went ahead, they added close to 8,500 long contracts. And on the short side, they covered close to 10,000 contracts. And if you pull up the chart, you'll see that in this correction that we've been seeing, well, the FIs, they've been gradually cutting their short positions from around 1.7 lakh contracts on the short side. That's come down to around 1.3 lakh contracts. So in this fall, they're actually covering short positions. If they were very confident that we're going to see a bigger drawdown, then that wouldn't happen. So I'll take that data point actually positively. Moving to the options data, then we have 2 strikes that are fairly active. The 24,200 call, that was very active. And on the downside, the 23,500 put. Now, in this particular strike, the premiums are around 150 rupees. So the near-term resistance will come in at around the 24,350. We're likely to see a 40-50 point gap up. I think that it gets sold into in some point of time. But I'm not ruling an intraday bounce because we have corrected close to 8%. Last 4 weeks, we have been on the losing end. So what are the levels we're looking at? The near-term support, that's at around this 23,900 to around 24,000 odd mark. If we break that, there's a lot of talk that this 200 DMA is coming. But I think it won't be a straight line down there if in case we're going to go and test that. I'm not ruling out a possibility that in the first half of trade today, we do see some kind of selling and then we make some kind of a support level. Let's see whether or not that works out. The resistance, though, comes in at around 24,550. You'll want to get past the 24,350 first and then head to that mark. Stocks that I'm looking at, well, even in Friday's trading session, some of these companies, they didn't get absolutely battered. So we'll have to keep an eye out on some of these large banking names that have actually delivered good numbers. ICICI Bank, HDFC Bank, as well as Axis Bank, put it together, that's 60% of the Nifty Bank. So let's get a couple of levels up on the Nifty Bank itself. The 100 as well as the 200 DMA, extremely important. That'll be a bit of a resistance mark, the 100 DMA. Well, the 200 DMA is far deeper out there. So we're starting in the green. I don't think you should chase the opening. Intraday dip could come about. And in the near term, we could have some kind of a fight from the lows of the day. So let's see how that works.
All right. So lots to track, and we'll do that in our, earnings are going to be big ones, and earnings single stock reactions have been so large, right?